Welcome back to another video. So today we'll try to understand what mutual funds are, what are some terms related to mutual funds like CAGR, AUM, expense ratio, exit load, etc. So the purpose of the video is for you to understand how is or what is mutual fund as a investment instrument and the terminologies related to them. So you can read any mutual fund fact sheet and make sense of it. So let's first understand what exactly is a mutual fund and why do you need them. So yeah, I think you might have heard about ultra rich people hiring wealth manager to manage their money. So they have a lot of money and they have some goals. They want to beat inflation, they want to buy a yacht, they want to go somewhere, and all of those are goals. To meet them, they need to diversify their money into different asset classes so that they can earn some passive income on them or reach their specific goals. So you as a fresher or someone who's new to these markets, you're straight out of college, you've got a job, you're salaried, but you're still to make sense of these financial instruments. When it comes to equity, the stock market, you want to invest there, but you want to see the market first, like how stocks behave, understand more about them, and figure out the game yourself. So till then, do you keep the money sitting or do you have a way, like can you hire a wealth manager of your own just when you're starting? Seems difficult, but theoretically that is possible. A wealth manager who won't just manage your own funds, he'll be managing the funds of lakhs of other people. So that builds a lot of trust, and this will be for a very nominal fee. So yeah, let's just dig right in and understand how mutual fund works and what are some of those terminologies. So let's look at the mutual fund terminologies. Okay, AUM. What is AUM or asset under management? So basically, AUM is the total corpus that a mutual fund holds. So say three people are investing in a mutual fund. Amit who's invested rupees 5,000, Mohit who's invested rupees 7,000, and Shanaya who has invested rupees 8,000. So in total, the corpus or the total amount that the fund manager will be handling is rupees 20,000. So that is the AUM or asset under management under the fund manager who will be managing the mutual fund. Now let us look at NAV. NAV or net asset value is basically the like per unit value of a mutual fund. So even a mutual fund can have multiple units. It can have 10 units, 100 units, but that is a different thing. But let's say that on the day of start, the value for per unit of a mutual fund was rupees 1,000. So say it has had three stocks: HDFC, IDFC, and SBI, and each of them had value of rupees 300, 200, and 500 on day one, which makes the total NAV of this one unit as rupees 1,000. Now they can have multiple of these stocks, but yeah, this is one fund unit defined by us. Now on day two, the HDFC stock went to 350, the IDFC one went to 180, and the SBI one went to 500. Like it kept the same. So when we add these, so the NAV on day two, that is the net asset value of this mutual fund, is 1,030 rupees. Yeah, one of the most important things. What is CAGR? So yeah, when you look at your money growing, say you've invested into something and that investment has been for 5 or 10 years, then you don't want to look at absolute returns. Okay, my money doubled, but that does not make sense, right? Did my money double in 1 year, 2 years, 3 years, 4 years, 5 years? Money doubling is irrelevant unless the time frame is specified. So CAGR is basically that yearly average return. So basically your money compounds, right? So if you had 1,000 rupees and next year it became 1,100, then your compounding for the next year will be on 1,100, not the starting 1,000. So CAGR basically is the average compounding annual growth. So let's look at an example. So in year one, the fund NAV was 1,000. In year two, it was 1,200, and in year three, it was 1,500. So when we calculate average, the years in between are irrelevant. So we have a total of 2 years, and in the first year the NAV was 1,000, in the third it was 1,500. So when we look at this, so the absolute returns, if you look at them, is 50%. But that is irrelevant because the time period is very relevant. So when you look at it, the CAGR is 22.47%. It's not exactly 25% because the growth on the next year was from 1,200 and not 1,000 itself. I hope that is clear. Now, next very important term is ER, that is expense ratio. So, as we discussed, the wealth manager is doing this for a fee. So, yeah, this is a very nominal fee, but there's a percentage, that is the expense ratio that is charged on your investments, and that is based on the NAV value of the day. So let us say that okay, I the NAV value on day one was 1,000, and NAV value on day two is 1,200. So this is before ER is deducted. ER is deducted daily from your investments. So this is a very hypothetical example. The ERs are usually much lower than this. Let us assume the yearly ER rate is 365%. So that makes that the daily ER is 1%, as 365 divided by 365. So the effective NAV is 100 minus 1, that is 99% of 1200, which will account to 1188 rupees. So that 12 rupees went to the fund manager, or basically the mutual fund unit, as the expense ratio. So they have to like hire people, they have to uh, invest in applications to manage your funds, all of that. So this constitutes that particular expense. So yeah, you will usually see expense ratios like 0.5%, 1%, and things like that. Okay, so now let us look at a real world example. On the coin website, let's look at Nippon India Large Cap Fund. So these funds have a theme. Basically, this will have large cap units. So large cap companies in India are the companies which have a market cap of more than 20,000 crores. So this particular fund will primarily invest in those. So you can look here. Current NAV is 103 rupees, and yeah, this is the per day reduction. So in this in per day levels, it reduced by 0.83%. Looking at the CAGR, so the CAGR value will depend on the number of years. So let's see, in 2013 the fund was at 14.697 rupees, and now today it is at 103 rupees. So you'd think of it like almost 7 to 8 times, but yeah, the time frame matters. So let's look at 3 years horizon, and let's move the CAGR to 3 years. So the annual growth for the 3 years was 19.68%. The NAV initially was 59, and today it is 103. So it seems to have almost doubled, but yeah, that is over 3 years. So the CAGR is the annual average growth, which is 19.68%. Minimum investment is like the minimum value with which you can start holding a fund, holding a unit into this mutual fund, which is rupees 100. The AUM, the asset under management, is 50,875 crores for this particular fund. The exit load, so basically the funds need to keep a exit load thing, because like say if there's a bad year, or if like the returns are too good for a particular time, a lot of people start to take out the money, which can affect compounding, because like they have to like sell some stocks to get that money free if the cash equivalents they've held for this particular return back thing is not enough. So you'll see different exit loads definitions, like 1% is redeemed or switched out on or before completion of 7 days from the date of allotment. So if you sell it within the 7 days, then 1% of the sell value will be kept by the fund. So that is something to prevent you from selling it quite fast based on some fear, or yeah, something else. Looking at the expense ratio, yeah, this is at 0.67%. Now, yeah, things like risk involved. This is equity fund, so the risk is very high. You can read about the fund manager with Nippon who is managing this, who is Mr. Sailesh Rajbhan. Then lock-in period. There's no specific requirement that you'll have to hold the fund for this long. Even if you sell it within the 7 days, you'll be just charged that 1%, but you are not held that okay, you cannot sell it for this much time. There's no lock-in period. Now you can look at the sectors in which they've invested, like financials, they have 18.79%, consumer discretionary 12.43%, industrials 9.63%, and so on. IT is around 7.42%. And then you can even look at the individual stocks, like this fund has allocated around 9.09% to a single stock, that is HDFC Bank. Then there's Reliance. So you can basically see if the fund's ideology matches with your own and make a decision accordingly. So there are a lot of things about mutual funds, like the themes they are in: large cap funds, small cap funds, mid cap funds, flexi cap funds, multi cap funds. Then there are thematic things like uh, funds that only invest in hospital or pharma stocks, IT based ones, some mutual funds that are investing outside into US equities or things like that. So we can make another video about that. So thank you for watching. Please subscribe, like, share, and do comment about what video you'd want to see next. Thank you.